Good day. Today is the 8th of September, time for a weekend review. And what to say? Since you are trading presumably individual stocks in the school of trend following and namely buying breakouts from price consolidations, then most likely you tend to take a look at the stocks themselves, not the indicators, because indicators, macro, and even indices are supplementary sources of information and sometimes are just a way to entertain yourself and produce some content. So the fact that right now one of them is being displayed on the screen tells you a lot already, because situation deteriorated rapidly throughout the week, and it was increasingly weaker, and Friday closed week as well. So what we can see here is that not so long ago, 70%, almost 70% of all stocks were above their 50-day moving averages. And of course, it's not a guarantee that all of them are working, and even that majority of them are in a viable position, because that only means that they are above. That doesn't mean that they are consolidating, doesn't mean that they are displaying properties of institutional accumulation in them. None of them actually happened. Almost never. Not too many viable setups all that time. Some of them were present, but most of them didn't work out, and this market was selective at best when it was sort of looking normal. Actually, this week, with a positive scenario in mind, this week was supposed to be a starting point in another uptrend, because it was quite how do you say it? You could expect that, because we had this initial wave of correction. You can see it even here in August. It played itself out during the first half of August, and that was the index move. And we also saw how these numbers improve. And as I've mentioned, some of consolidations started to look interesting, but that all quickly came to a halt. So right now it's just the same as it was in the beginning of August. 44% of stocks are above their 50-day moving average. What concerns me is that right now, if we take a look at fear and greed, it's not extreme. It's far from being extreme. And if we take a look at the AAII Investor Sentiment Survey, during the previous week, there was quite a significant level of bullishness. So once again, same configuration, weak market, weak stocks, low levels of institutional support for individual names, and high bullish sentiment. That's exactly the reverse of what we want to see in order to have some meaningful exposure in this market. So, but I should say that yeah, let's take a look at the actual charts at this point. So DIA is weak. QQQ is the weakest of them all. And actually, Friday was another distribution day, as I've mentioned before, very weak session. And SPY is weak too, but a bit stronger relatively to QQQ. And the main theme so far is the fizzling of NVIDIA for whatever reasons. Maybe it's the AI theme which stops to fascinate people. Maybe some other reasons. My personal view is that AI is becoming sort of a bit of an average everyday technology, which is transforming, of course, the way we live and do business, but the hype is gone. This is that kind of situation when the hype is slowly fizzling out, valuations correct, but underneath the trend is still in play. So AI is not gone. It's here to stay. It's one of these transformative technologies. But after that 2-year run in NVIDIA, let's take a look at the weekly chart. When did we start? We started, let's say, here. So even now it is 250%, and on peak it was almost 400%. So yeah, it could be well over for NVIDIA, or it could consolidate again. But what's obvious at the moment is that the fact that it needs more time. And since this rally was almost exclusively an index rally, not too much participation from the average names, right now the market is trying to figure out what's happening. And of course, there is a fear of recession. We can see that in weak oil. Let's take a look at USO or at Brent. And when we open the weeklies, we see that the oil is at a very significant support. And if it goes down from here, that could mean that there will be no soft landing for U.S. economy. What else? Of course, volatility is confirming these it's not a panic, but it's a bit of a panicky behavior of the market. So not so bad as it was in August, but quite significant right now. So this is the main theme: weakness, rotation from at least temporary situational rotation from AI stocks, from chip makers, and of course NVIDIA. Also, there is quite a bit of weakness in these tech mega caps, which were supposed to drag the market further. So yeah, Amazon, Google, Microsoft are all very weak. So absolutely no signs of institutional support during the previous week. So this is the theme. And can we expect that mid caps and small caps, the main anticipation of summer, that these guys will be able to step back into the limelight and make the broad market, not only index names, mega cap names, or AI names. Could these small and medium enterprises pick up the stick and lead? Well, it's not the end right now, but they are seeing some pressure as well. What's good is that they a bit stronger in relation to their moving averages. It could be interpreted as a suggestion that there is still maybe this scenario is far from being pushed back in time, but right now there are no obvious signs that it's going to play out anytime soon. The next week is obviously is going to be very interesting, and also what's even more interesting that this time Bitcoin played as a perfect futures for the stocks because it trades 7 days a week, so it was quite weak during the previous weekend, and it sort of was a prophecy of things to come. So what else? Gold is still holding, what's interesting. And with that, let's take a look at my September watch list. So right now it looks like this. During the correction during this week, most of the charts were completely destroyed. So not completely destroyed, but right now they still can produce another wave of consolidation, maybe here, another wave of another contraction in volatilities, and maybe set up a bit later and follow through to the upside. But as well, there is a good chance that it will just continue to fall, because right now, given the fact that Friday was weak as well, it could be anything. It could even open on Monday with another gap down, or maybe even some massive event like flash crash, because obviously distribution dominates this tape. Just take a look at this Tuesday, very weak. There was a bit higher volume. We're looking at a net, by the way, one of the better names in this market. On Thursday there was an attempt to buy something, but actually it was a churn day, because the volume was higher than the day before, and it was quite high, higher than average volume, but the progress in price was so low. That means that actually this day, despite being green, was a distribution day also, and these institutions were using this volume to get rid of their shares. And in the most of the names you will see a very similar picture. For example, here is ARGT. This one is different, by the way. Yeah, this is an Argentina ETF. So if you were guessing effectiveness of President Milei's measures, that now you can see that it's being he gets quite a support from the market, because you see how everything is weak, and Argentina is strong in this market. Once again, my watch lists are not very representative, because I focus on strength, and you'll see stronger names far more often, but you should take into account the fact that it's getting harder to buy such names under these conditions. So here you can see AVGO, weak. Maple Bear is one of the better names. CGON is one of the better names as well, and this is what the best names show to us. I was looking at this Costco stock, and obviously it's a defensive name because I think it's about recession. It's about recession because Costco is a discounter, so tried to consolidate by Friday was so bad. Even a defensive name wasn't able to attract some buyers, and here is it is a sort of reverse churn because the volume was high 2 days, but here it was actually accumulated, and here there was no significant progress to the downside, unlike in, for example, AVGO. This is how true weakness looks like in this market. Pharma is in a bit of transition. Some of these names still try to hold on to even grow, but there are fewer of them. Carvana, this is DYN is one of the examples of weakening pharma. Gap down. Looks like some test results were published or something like that. Looking quite weak so far. This one I've decided to stick to. Another defensive name. I think it's foods again foods, and here it was quite weak also, but I don't think that it I think it's similar to cost, but this particular one was popular within one specific trading community, so there are lots of guys just like me who were stopped out or were checking out during the day. So this could, I think there is a good chance that it will hold on, maybe go a bit further as these guys are leaving the name, but it could consolidate faster. Maybe, at least at the moment it looks like this. Funko is back in black. Don't know what's happening. The toys are the same, but it is a bit stronger than your average name. Freshpet is a good name. GR&D is holding well. I was looking at Goldman Sachs, and this was actually on my buy list, but never triggered buy point, and is quite weak right now. Obviously, looks like the index. But here you go. Tuesday, massive distribution. Thursday, massive distribution. Friday, total weakness. Actually, quite shortable from this point. Not a fan of this side, but it could very well work out. This is the new name I found not so long ago. Once again, holding better, showing some interesting price behavior. Here doubled since January. Don't know what's happening there, but definitely worth a look. Another buy point. I don't remember, did I buy it actually or not, but I bought it before, but got stopped out, and I think that I did not buy this one because probably it was gap. Yeah, it gapped out, so I decided to skip it. So this is another sign of weakness in biotech, in pharma. IoT, Samsara, I still like because obviously in such a market to see well received report, it's good, and actually it withstood Friday with this. You saw how weak was the market, but it's holding, and I think this one could be a priority name to watch for For buy rules, what other buy rules you prefer? KLLC. I like this ETF LABU, but it's weak too. This one is quite representative of what's happening in biotech space right now. LBPH. I don't know if I should actually stop on each of these, because right now you see the theme quite well. MUSA is one of the better ones. Netflix is weak too. I want to buy this one, or maybe I had it and it stopped me out. Don't remember as well. ON is one of the better ones. Definitely worth a special place in the watch list. PEGA is one of the stronger ones too. PLTR is quite interesting also. But yeah, not so many opportunities. And this the upper part was the watch list for the previous week, and right now when it stops to be sorted in alphabetical order, we can take a look at the names that I found today, and the names that I will be pointing out as potential signals during the next week. And here we see that even under these conditions, there are some names that are setting up. And one of the guys, one of the people in the markets whom I respect, from whom I'm lucky to be getting experience as well, he told that there are setups in each market, and he is absolutely right. The $1 million question is what's happening to these setups, and under these conditions they just don't work. No positive follow through at all. So to summarize, I think that it's wait and see and best. You can see all these names. Will I be buying any of them? I'll be honest with you. During the beginning of the week, that's let's say it this way, the probability is quite low. So as always, I'm managing my risk, and I'm controlling each trade. I did some adjustments to my strategy, but it's a topic for another video when I'll be reporting my results. But death by 1,000 cuts is real in this business, even when you manage your risk. When the average number is low, it is real. So caution, and I think at this point it's quite obvious that one should be watching this market from the sidelines, without active participation. So I think that's it. Have a great second part of the weekend, and let's be in touch.